Unbelievable market meltdown, stocks and crypto crash. Welcome back to the channel. Today we're diving into some of the most shocking market wipeouts in recent history. From stock market plunges that seem to defy gravity to crypto crashes that evaporate billions overnight, these events are truly unprecedented. Think of it like a financial autopsy, where we dissect what went wrong and what it means for you. We're not just here to report the news. We're here to help you understand it, learn from it, and protect yourself. Let's get started. Let's kick things off with Japan, a country known for its stability and economic prowess. The Nikkei 225, Japan's version of the Dow Jones, experienced its biggest two-day plunge in history. This was a full-blown freefall, with the index shedding trillions of yen in value. One of the biggest culprits is the Bank of Japan's recent decision to maintain its ultra-low interest rates. While other central banks are raising rates to combat inflation, Japan has kept its rates near zero for years. This has made Japanese assets less attractive to foreign investors, who are now pulling their money out in droves. This perfect storm of negative factors has created a sense of panic in the markets, leading to the historic sell-off we're seeing now. Now, let's shift our attention to the US stock market, where things haven't been much prettier. The Magnificent Seven, Apple, Microsoft, Amazon, Alphabet, Nvidia, Tesla, and Meta, lost a combined $1 trillion in market cap in a single trading session. As inflation continues to soar and interest rates rise, investors are starting to question whether these high-flying tech giants are truly worth their astronomical prices. Add to that the growing fear of a recession, and you have a recipe for disaster. Their massive single-day loss is a stark reminder that even the biggest, most successful companies are not immune to market forces. Moving on to the wild world of crypto, where volatility is the name of the game. Even seasoned crypto investors were caught off guard by the recent bloodbath that wiped out over $500 billion from the market in just 24 hours. One major factor was the collapse of Terra USD, a so-called stablecoin that was supposed to be pegged to the US dollar. When Terra USD lost its peg and crashed, it sent shockwaves throughout the entire crypto ecosystem. Bitcoin plunged below $20,000 for the first time since late 2020, while Ethereum wasn't far behind. This crash served as a harsh reminder that cryptocurrencies, while potentially lucrative, are incredibly risky investments. With all this market turmoil, it's no wonder that investors are starting to panic. The markets are currently pricing in a 60% chance of an emergency Fed rate cut. It means that investors believe there's a high probability that the Fed will slash interest rates in an attempt to stabilize the markets and prevent a full-blown recession. But with the economy showing signs of slowing down and inflation still running hot, the Fed may feel like it has no other choice. South Korea took the drastic step of freezing all stock market sell orders in a desperate attempt to stem the bleeding. In an unprecedented move, the South Korean government effectively hit the pause button on its stock market, preventing investors from selling their shares. The freeze on sell orders was intended to give the markets a chance to cool off and prevent a complete meltdown. However, it also raised concerns about government intervention in the markets and the potential for long-term damage to investor confidence. Back in the US, the tech-heavy Nasdaq continued its downward spiral, with Nasdaq futures plummeting by a staggering 6.5% in a single day. Futures are contracts to buy or sell an asset at a specific price on a future date. When Nasdaq futures plunge by 6.5%, it means that investors are extremely bearish on the outlook for tech stocks. The same factors that are weighing on the broader market, inflation, interest rate hikes, and recession fears, are hitting the tech sector particularly hard. This toxic combination of factors has led to a mass exodus from tech stocks as investors seek safer havens for their money. And if all of that wasn't enough to make you nervous, there's also the growing geopolitical tensions in the Middle East to worry about. Specifically, the conflict between Iran and Israel, which has been simmering for decades, is threatening to boil over. In recent weeks, There have been a number of high-profile incidents, including attacks on ships and military installations, that have raised fears of a wider conflict. Geopolitical uncertainty and market volatility go hand in hand. A full-blown war between Iran and Israel would be a major destabilizing event for the entire world. This is a situation that investors are watching very closely. That's it for today's video. These market wipeouts are a stark reminder of how volatile and unpredictable the financial world can be. Stay informed, stay vigilant, and don't be afraid to adjust your investment strategy as needed. Make sure to like, subscribe, and hit the notification bell for more updates and insights.